Hey guys, welcome back. And if you're new here, my name is Mark McClung, and I'm a real estate broker in Denver, Colorado. And on this channel, we discuss all things real estate. So let's get into it. On this video, we're gonna discuss the three biggest things that influence Denver's housing market in May. Number one, interest rates. That is the buzzword these days, isn't it? From the Fed to the 10-year Treasury, you name it, everybody's talking about it. So let's jump into some numbers. From May of last year, we're up 2.27%. In fact, this past November, the average 30-year rate was 3%, and now it's at 5.23%. That's really gonna hurt people's buying power. For example, people are getting priced out. A $500,000 mortgage in today's rate versus this past November's is an increase of $647 a month. That's 30%, folks. That's a lot. And unless you're on an unlimited budget, you have two choices. You can bring some more cash to the table to keep the payment the same, or you reduce your buying power, which most people are. So folks are getting shuffled down the price points, and unfortunately the people at the bottom are getting priced out. The number two option, which is higher rents. So at the end of the day, it's expensive for everyone. I'm having conversations daily with clients who want to wait it out and see what happens and wait for the rates to come back down. And I just respond with, I don't know what's gonna happen in the future. Rates are probably gonna continue to go up. Eventually they will come down. I had the same conversation with people who said I'm gonna wait at 3% when it went from 3 to 4, and when it went from 4 to 5, and now 5 to 6. So my advice is, if you're planning on buying and wanted to buy, and you can still afford it, the monthly payment still makes sense to your budget, then do it. You can always refinance when the rates come back down. So don't wait. You still need to live somewhere, and with rents rising, it's not always the cheaper option. You think it's at the worst? Well, I would advise to go look at the historical rates and what they did in the late 70s. They shot up really fast, and they took a really long time in the 80s to come back down to lower levels. So it's better to lock in now with the known instead of speculating in the future and being stuck renting for years. Number two, buyer demand. There are 1,400 homes sold in Denver this past May, and it's pretty much unchanged from 2021, and it's been trending up from January through May. Typically, that's what we see. We see the lowest inventory in the first part of the year, and it ramps up as we go through the year. And it starts slowing down from June, July, August timeframe. There have been a tremendous backlog of buyers who've been unable to compete in this really tight housing market, who weren't able to go up hundreds of thousands of dollars, who were unable to waive appraisals, who were maybe using FHA or VA financing and just couldn't catch a break. Those folks are seeing success now. Unfortunately, there's a cost to that, the higher interest rates. A couple of things that are gonna influence buyer demand throughout the rest of the summer and into fall. The higher interest rates, obviously, we've talked about that already. As they keep going up, people are gonna get more nervous about their payment, the cost, and they're still equating it to 3% and sub 3% rates that we saw a year and a half ago. So the comparison it makes it a really tough pill to swallow, and I think that's going to continue to affect folks until they adjust to the new norm of what the rates are going to be. If you're watching mainstream media and hearing all the recession talk and the worry and the stock market, you know, that's the scary stuff. I'm not going to lie. So it's influencing people on the real estate side. They think there's going to be a recession, which there may very well be one. But at the end of the day, the housing market still remains strong. We are not poised for a 2008 repeat. Our financial markets and lending practices are super conservative these days. And we're just not gonna see a lot of foreclosures and short sales because most people have equity in their home. Unless you purchased in the last 6 months, 12 months and have to make a move, you're gonna have some equity to tap into to sell if you have to sell or have to move. And another thing that is influencing people's decisions are, we're at and exceeding record home prices throughout Denver and the country. I think what's gonna happen is we're not gonna continue to see these high double-digit increases. Things are gonna start flattening a bit, but they're still gonna appreciate. We're gonna get more back to normal housing market appreciation that everybody's used to seeing. Yes, there are price drops. You're going to continue to see price drops on new listings. What happens when the market changes? We're going like gangbusters. Everybody's used to, oh, the last house sold for $500,000. I'm going to price it $525,000. So it takes some time for that to adjust, and people are just overpricing and outpacing the market right now. And they need to be a little bit more conservative with their numbers. And as sellers, gain some experience and sometimes learn the hard way, they'll catch up to that, and we won't see as many large price drops. We may see some tweaks. You will always see price drops. There was price drops when stuff was selling like hotcakes back in December, January, February timeframe. People just sometimes don't price homes right. It happens. What we really need to see and track sales each month so that we can get accurate data and not just, home price drops and what people listed for. Because at the end of the day, that's just what they want to get out of their home when they list it. What a ready, willing, and able buyer will pay for it is what really matters. Number 3, home inventory. We track inventory daily. That's the first thing I do when I get into the office. How many homes are active on the MLS in Denver? To give you some perspective, January, February, March timeframe, I saw around 400 to 500 on average. I saw some in the 300s, but that wasn't the norm. So conservatively speaking, 300 to 400 per day. Now we're seeing 1,300 listings per day. Sounds like a lot. Yes, we tripled our inventory to sell, but it's still super, super low. In fact, the last time we saw that number, we were in the middle of the pandemic and people weren't going out and looking at homes. We have a half a month inventory, meaning if we turned off the supply and no more listings were allowed based on our rate of consumption, in 15 to 17 days, we have no more homes to sell. All gone. A seller's market is labeled from 0 to 5 months. 6 to 8 is a neutral market, meaning there's healthy negotiation on both sides. And then 8 plus getting into buyer's market and then gets to the unstable realm. So half a month, guys, half a month. We still aren't anywhere near a bubble. In fact, the inventory problems are not going away anytime soon. Nationally, they've been underbuilding homes for the last 2 decades. They just have not been keeping up with supply. As new home buyers hit the market, become of age, there's just not much there for them to buy. Denver, our problem is even a little worse. I kind of relate it to visually like San Francisco market surrounded by water. They have no room to grow. Here in Denver, it's very, very much the same, except we're not surrounded by water, obviously. We're surrounded by other municipalities around us. So we have no new land to annex to build large tracts of new homes like some of the suburbs do. We have to work on density. Density has been an issue as well because of the builder defect laws on the books. It's a very complex subject. I'm happy to do another video on it, so just leave some comments below that you'd like me to, and we'll put that in the queue to work on in the near future. So, in closing, the market is in fact changing. It has to. It was unsustainable what we saw the end of last year and through the first quarter of this year. Buyers and sellers will adapt to the new interest rates, the adjusting economy. If we do go into a recession, it's going to slow down a little bit. It will pick back up. Will it have a major impact on the number of homes sold, prices, availability? We will definitely be keeping a close eye on it and report back to you with any changes. Have any questions or feel differently about the market? Let us know in the comments below. We'd love to hear from you. Every month we help a lot of people buy and sell homes in the Denver market, and would love to connect and hear your story and how we can help out. Give me a call or shoot me a text in the number below. Love to hear from you. See ya.